Good morning. I'm Andy Myers at Weiss Research, and this is your morning market alert for Thursday, June 16th. U.S. investors seem to be taking a cautious approach this morning, following a big drop in the market yesterday. Some disappointing data on consumer prices and manufacturing were largely responsible for those declines, and economic news is once again in the spotlight this morning. Traders are digesting reports on weekly jobless claims, May housing starts, and the current account balance. We'll have the results and all the market reaction after the opening bell. Then later this morning, the Philadelphia Fed will release its survey of business conditions for June. The European debt crisis also continues to weigh on sentiment. Greece's prime minister is reshuffling his cabinet in an effort to win backing for the latest austerity package, which is required for the country to keep receiving financial aid from the EU and IMF. The move comes after a general strike turned violent in Athens yesterday. The problems in Greece are sending stocks across Europe sharply lower again today, but they're also weighing on the U.S. financial sector. According to the Bank for International Settlements, U.S. banks had total exposure of $41 billion to Greece as of the end of last year. That means they could be on the hook for huge losses if the country defaults on its payments. And even if Greece just restructures its debt, as Germany's finance minister has proposed, investors and the rating agencies could interpret that as a default, potentially hurting the banks as well. Against this backdrop, the euro is extending its losses against the dollar. The dollar's recent strength, as well as concerns about a slowdown in demand, have really taken a toll on oil prices over the past couple days. They suffered their biggest one-day drop in more than a month yesterday, falling below $95 a barrel. Meanwhile, Treasury prices are rising again today as investors search for relative safety in the markets. The yield on the two-year note touched its lowest level since November yesterday. On the corporate front, we're seeing a big deal in the natural gas industry. Energy Transfer Equity is buying Southern Union for $7.9 billion, including $3.7 billion in debt. The deal values Southern Union at a 17% premium over its closing price on Wednesday, and the stock is jumping more than 15% in the pre-market. Energy Transfer Equity is set to open modestly lower. Elsewhere in the energy sector, ConocoPhillips signed the first ever oil deal with Bangladesh, giving it the right to explore for oil in the Bay of Bengal. And Enphase Energy filed plans to raise up to $100 million in an initial public offering. Enphase specializes in technology systems to boost the efficiency of solar panels. It will likely trade on the NASDAQ exchange under the ticker symbol ENPH. Turning to the technology sector, shares of Finisar are tumbling 17% after it missed earnings estimates. The maker of fiber optic system components also forecast weak results for the current quarter. Meanwhile, Intel is losing ground ahead of the open following a downgrade from FBR Capital. And after today's closing bell, BlackBerry maker Research in Motion will release its quarterly results. That's the latest from Weiss Research. We'll be back after the opening bell with all the economic data and market reaction.